Good day. Today we are going to do the November 2022 accounting paper 1. So we're going to do only question 1. 1.1. Complete the following statement by choosing a word from the list below. Write only the word next to the question number. Now 1.1. They are employed by the company to set up and monitor the processes. So in this one, they are talking about what? They are talking about the internal auditors. So these are the internal auditors. Are appointed to give an unbiased opinion on the financial statement. So these are the external auditors. Number 3. Dash are appointed by the owners of the business to perform key management functions. So what are those? Those are the directors. Those are directors. And then 1.2. The information relates to the financial year end on 28 February 2022. Required 1.2.1. Complete the following notes to the financial statement of financial position, balance sheet, ordinary share capital, and the retained income. So let's go to the information. Information A. Extracts from the accounting records on 28 February. So meaning that these are the balances at the end of the year. So 2022, these are the balances on 28 February 2022. Balances on 28 February 2021. Now they gave us the ordinary share capital balance at the end on 28 February 2022, the end of the year. They also gave us the retained income, the balance at the end of the year. So let's go to the answer sheet. So in the answer sheet, you can see that in the ordinary share capital, they wrote this balance at the end. Shares in issue at the end of the financial year. All right. So they also gave us the retained income at the end of the year. Then also the final dividends are already recorded. So let's go to the transactions. On the 1st of March 2021, the beginning of the financial year, because the year ends on 28 February 2022. 75% of the authorized shares, 1,200,000, were in issue. So 1,200,000 shares were in issue. I mean, like 75% of the shares were in issue. How much is that? That is 900,000 shares. So at the beginning of the financial year, the shares that were in issue, they were 900,000 in the ordinary share capital. Shares in issue at the beginning. So they did not tell us the value. They just told us about the shares. And then 30 August 2021, 80,000 shares were repurchased from a retired shareholder. So now we have a retired shareholder. So we have a buyback of shares of 80,000. So we must put it in bracket to show that we are subtracting it. So in the buy back. Now what did they say? They said he was paid 20% above the average share price and will no longer qualify for the dividend. So they're saying that this shareholder who has retired, he was paid 20% above the average share price. So let's take the average share price as 100%. So and then they are saying that he was paid above 20% above the average share price. So it means that if we want to find the amount for the average, we're going to say 136,000 multiplied by. So this 136,000, it's at 20%, right? And what we want is the average price, which is 100%, because this one is at 20% above this one. So what we're going to do is that below we're going to put what you have. So what you have is a 20%. Then what you're looking for, we're going to put it above as 100%. How much is that? 136,000 multiplied by 100 divided by 20. 680,000. So the amount for the average share price, it is the one that goes to the ordinary share capital for the buyback of shares or for the shares that has been repurchased. And then the one that is above the average share price, it goes to the retained income. Meaning there's this 136,000. We are going to take it and go and record it under the retained income as 136,000. Okay, the one that is above the average share price. And then the one for the average share price, it goes to the ordinary share capital, 680,000. Now let's find out that how much is the average price for the buyback, because it was not given. So we're going to divide it by the number of shares. So it is 8 rand 50. Now, because we have this one, it means that now we can find the one for the beginning of the year. Because to find the average share price for the buyback of shares, if the buyback of shares were before the additional shares or the new shares, you just take its average price from the shares that are issued at the beginning of the year, meaning that their share price must be the same. So now we have the one for the beginning of the year. So 900,000 multiplied by 8.5, that is going to be 7,650,000. Right? So let's continue. On 31 August 2021, an interim dividend of 28% was paid. So the interim dividends, it goes to the retained income under the ordinary share dividends. Interim dividends. So what are they saying about the interim dividends? They are saying 28% per share was paid. Now remember, they said the buyback of shares, they will no longer, this shareholder will no longer qualify for the dividends. So meaning that he's not going to be paid the interim dividends. So meaning that this 28%, right? This 28%, for the interim dividends. So we're going to come here, 900,000 minus 80,000. So it means that the shares right now that are left for the interim dividends, they are 820,000. These are the shares that are going to be used for the interim dividends. Why am I saying that? It is because they said on 30 August 2021, they said these shares that have been bought back will no longer qualify for the dividends. So meaning that when we are calculating the interim dividends, we are going to calculate them in the shares that are remaining, which are 820,000. 820,000 multiplied by 0.28 cents. So 820 multiplied by 0.28, that is 229,600. Right? Now let's continue. Then on the 1st of December 2021, an additional 150,000 shares were issued. So now new shares in issue. So now new shares in issue. They are 150,000. So the ordinary share capital, they are increasing by the 150,000. So now to find the ordinary shares at the end, we are going to say 900,000 minus 80,000 plus 150,000. So this is going to mean that the shares at the end, they are 970,000. Right? But then now, we are not given the value for the new shares. And we are not told that they were bought. We are not told that they were issued at how much. What was their issue price? We are not told. But then we can find them. How? Because we know that to get the ordinary share capital at the end, we are going to say shares at the beginning minus buyback plus the new shares. Then we're going to get the shares at the end. It means that now we're going to go back. We're going to take the bunch at the end, we add the buyback, we subtract the shares at the beginning. So let's do it. 7,954,000 plus 680,000 minus 7,650,000. That is going to be 984,000. So now we have found these shares. So if we want to find their issue price, we're going to take this one and divide it by the 150. Same thing with the one at the end. We take this one, we divide by the 97 when we're going to find the issue price. Let's go to the retained income. So we've recorded the interim, and also the final was already recorded for us. Now let's go to the adjustment C or transaction C. Income tax for the year, after taking into account all adjustment, amounted to 438,000. So this is the income tax. It is 438,000. So remember, when we are doing the retained income, we need okay, so in the retained income, we include here the net profit after tax. Right? We include the net profit after tax. So let's go back to the transaction. So they're saying income tax, it is 30% of the net profit. Now remember, the net profit is 100%. Right? So, and then the net profit after tax. So because the tax has been subtracted, the net profit it is now it is going to be 70%. Why are we saying 70%? It is because we have subtracted the income tax from the 100%. So now let's find the net profit after tax. To find it, we're going to say 438,000 multiplied by. So below we're going to put what we have. So what we have is the income tax, which is the 30%. Right? And then above we're going to put what we want. So what we want is the net profit after tax, which is 70%. Then now we can find the net profit after tax. So it's 438,000 multiplied by 70% over 30. Okay, 438,000 multiplied by 70 divided by 30. Okay, let me do it again. 438,000 multiplied by 70 divided by 30. So it is 1,022,000. Right, let's continue. So I think we are done with the retained income. Let's just go and totalize it. So the ordinary share dividends, so let's add them together. Interim 229,600 plus 213,400. So there is going to be 443,000. Remember, we must put the ordinary share dividends in bracket to show that we are separating them. Now what we want is a balance of the retained income at the beginning of the year. Now remember, to get the balance at the end of the year for the retained income, we must say the balance at the beginning plus the net profit after tax minus buyback minus ordinary share dividends. Now I'm going to go back and say balance at the end plus dividends plus the buyback minus the net profit. Then I'm going to get the balance at the beginning. So plus 443,000 plus 136,000 minus 1,022,000. That is going to be 753,000. Okay, now we are going to the balance sheet. But then first thing first, let's go to the they are already done for us, the shareholders for equity then. So we're going to continue. The following adjustments are relevant to complete the statement of financial position. The first one, the provision for bad debt must be increased by 2,610. Where is the provision for bad debts? So the provision for bad debts, it is 23,640. So we are told that we must increase it by 2,610. Let me check again. By 2,610. So now, remember, the provision for bad debt, it goes to the trade and other receivables, and it decreases them. Alright, but then what do you include in the trade and other receivables? We include the debtors control, which is 875,000. So let's go and record it. So they are here. The debtors control. Okay. So the way we are going to do this, we are going to start with the balance of the debtors control. So which is 875,000. 875,000. Then now we're going to subtract the provision for bad debts. Because the provision for bad debt decreases the debtors control. So it is 23,640 minus 23,640 minus 2,610. 610. Right. Let's continue. Point number 2. Only the half of the audit fees were paid. The balance will be paid in March 2022. Now let's go and check the audit fees. The audit fees, they are 48,000. Right? They are 48,000. So this is the half of the audit fees. It means we still need to pay this expense for the audit fees. Now, we need to remember the matching concept. State that expenses should be recorded in a year they belong in, even if they have not yet been paid. So meaning that these audit fees, we're going to record it. But then now, we are owing another half of the audit fees. So because we are owing another half of the expense, we call this an accrued expense. So which is 48,000, because they said it's only half that is being paid, meaning that we are owing another half. So the accrued expense, we record it where? We record it in a trade and other payables. So let's go and start with the creditors control. 617,450. 617,450 plus the 48,000 with the accrued expense. Let's continue. Point number 3. The tenant occupies part of the premises from the 1st of May 2021. Remember, the year ends on 28 February 2022. So they're saying that this tenant occupies the premises from the 1st of May 2021. So we're going to start counting from the 1st of May 2021. Then they are saying he has not paid the rent for January and February. So it means that he paid the rent for only from 1 May 2021 to 31 December 2021, because he did not pay for January and February. So he paid for how many months? It's May, June, July, August, September, October, November, December. That is 8 months. May, June, July, August, September, October, November, December. 8 months. Now let's go and check that rent. So the rent is how much? 102,400. 102,400. 102,400. So this amount is only for how many months? 8 months. So divide by 8. We want to know that how much is the rent income per month. 102,400 divided by 8. That's going to be 12,800. So we are looking for the rent of January and February. So just going to say 12,800 multiplied by 2 because it's only 2 months. That is 25,600. Now, we have not yet received this rent for January and February. So because it's an income that we have not yet received, that income we call it an accrued income, which must be recorded where? In the trade and other receivables. This 25,600. Trade and other receivables. So plus 25,600. Let's continue. Letter E. 240 of the fixed deposit will mature on the 1st of April 2022. Let's first go and check the fixed deposit. It is how much? 489,000. Remember, the fixed deposit, it falls under the non-current asset, under financial asset. So 489,000. Fixed deposit, it is 489,000. Right? Let's continue. Now, what did they say here? They said 240 of the fixed deposit will mature on the 1st of April 2022. That is the next financial year. Now, what do you say is this? Once a fixed deposit is going to mature within the period that is less than 12 months, that fixed deposit, it no longer falls under the non-current asset. It must now fall under the current asset. So therefore, this 240,000, we must go and subtract it from the fixed deposit that falls under the current, that falls under the non-current asset. Then we're going to go and put it under the cash and cash equivalent, a fixed deposit maturing in 12 months. Okay? So before we continue, just remember something. Here, in letter C, we forgot something, income tax. This income tax of 438,000, we must go and compare it with the SARS income tax for the provisional tax. It is 450,000. So this means that the business here paid this tax in this current year, right? But if you can check, the income tax, it is 438,000. So it shows here that the business paid more. So if the business paid SARS more, it means that SARS is owing us. So when SARS is owing us, it is now an asset. So we need to find out that how much is that asset. So 450,000 minus 438,000. That is going to be 12,000. So this is an asset. So it must go and fall under the trade and other receivables. So sometimes we can just do this using a ledger account, SARS income tax. So in a SARS income tax, on the debit side, you include the provisional tax, so which is given as 450,000. And then on the credit side, you include the income tax, 438,000. So in this case, we were not given the SARS income tax opening balance. It was not there. Okay, so you just can see that the bigger side here is a debit side for 50,000. For 50,000, so we have a balance credit down of 12,000. So we must be transferred to the opposite side as a balance brought down 12,000. Now, like I said in the previous videos, if SARS income tax has a debit balance, it is an asset and it must be recorded under trade and other receivables as 12,000. Now let's go and continue. F. A debit balance of 17,950 from a debtor's ledger must be transferred to the creditor's ledger. Right? Now, this is a debit balance. In the debtor's ledger, it's a debit balance, meaning that it's in this side. And then now this creditor's ledger, debit side, and the credit side. So, debit balance of 17,000 from a debtor's ledger is a debit balance in a debtor's ledger. Now, if we want to transfer it to the creditor's ledger, we must first credit it first. Then now we can transfer it to the creditor's ledger. Now we can see what is happening. Debtor's ledger is decreasing, also the creditor's ledger is decreasing, because we are transferring the debit balance. So when we are transferring it from a debtor's ledger, we must first credit it first, then we can transfer it. So it is 17,050. So it means that debtor's control is decreasing with 17,950, and then also the creditor's control, it is decreasing with 17,950. Right? So let's go back. Letter G. So they just gave us the financial indicators. So let's go to H. We're going to come back to G. The loan from XY loans will be reduced by a capital portion of a loan of 228,000. Let's go and check that. How much is our loan? How much is our loan? The loan, the loan is not given. Okay, it is not given. Let's go to the answer sheet and see what they showed us. So here in the loan there's nothing. Okay, so let's go back. The last point again. They said the loan from XY loans will be reduced by a capital portion of 228,000 in the 2023 financial year. Right? Okay, I'm going to come back to this one. We're going to come back to this one. Let's just go and check in this trial balance if there are things that we did not record. Okay, so we have the shareholders for dividends, which is a liability which falls under the trade and other payables, 213,400. 213,400. Right? What else? So we have dealt with this one, we dealt with this one, we dealt with this one, we dealt with this, we dealt with this, we dealt with this, we dealt with this. They said trading stock is a balancing figure Then now we have the petty cash. The petty cash, it falls under cash and cash. So let's go and record it, 5,000. So we're going to say plus 5,000. And then they said the bank overdraft is a balancing figure. Remember, the bank overdraft, it falls under the current liabilities. It falls under the current liabilities. So it's a balancing figure. So with this, it means that we're done. So you just need to go and use. You have to go and use these financial indicators. Let's go and check the current asset. Okay, so they said that this one is a balancing figure, right? So let's get the total for this one. Trade and other receivables. 875,000 minus 200,640 minus 2,610 plus 25,600 plus 12,000 minus 17,950. That is going to be 868,400. So in this one, the bank account, we don't have it. We don't have the bank account. So we just have to come and write it total here, because we don't have a bank account. We have the bank overdraft, which falls under current liabilities, right? And then now the inventory, they said it's a balancing figure. Now let's do it as a balancing figure. We don't have the inventory, but the current asset total is given. So we just have to take it and subtract the other amounts, because we know that adding all this, it must give us this 2 million. So we just have to subtract these two. So 2,080,000 minus 868,400 minus 245,000. That is going to be 966,600. Right? Okay. Let's continue. Okay, so it means that now with the current asset that are given, 2,080,000. With this amount, it means that we can find the current liabilities, because the current ratio, it is 1,6:1. The current ratio, it is 1,6:1. Current ratio. So it is 1,6:1. Right? So now let's do it. So we know that this ratio is saying that current asset is to current liabilities, right? So the current asset, we do have them, is 2,080,000, right? But then we don't have the current liabilities. And then we do have the ratio, it is 1,6:1. Now we just have to cross multiply. 2,080,000 it's 1,6 current liabilities. Then I will have to divide both sides with the 1,6. So now current liabilities is going to be how much? 2,080,000 divided by 1,6. That is going to be 1,300,000. So now we have found the current liabilities, right? Now, so let's calculate the total for the trade and other payables. Trade and other payables is 213,400. Oh, okay, 617,450 plus 48,000 minus 17,050 plus 213,400. That is going to be 860,900. So the bank overdraft, we're told that it is going to be the balancing figure, right? But then there's a transition there at the end. They are saying that the loan from the XY loans will be reduced by a capital portion of a loan. Okay, so the loan will be reduced by 228,000 in the 2023 financial year, right? Okay, they are saying that the loan will be reduced by this amount in the next financial year. So this means that we have the current portion of a loan. Current portion of a loan so 228,000. Okay, so you know what, let's come here and fix this one. Shareholders, let's separate them. Shareholders with dividends, let's give them their own accounts. 213,400. But even if you write it this way, it's fine. Just that here they gave us a space. 213,400. Okay, so now we can just this is 600. Let's get this 647,500. Right? Now, the bank overdraft, it's a balancing figure. So we just have to take the current liabilities and subtract all of this. So it's 1,300,000 minus 647,500 minus 228,000 is equal to 424,500. Okay, now what else are we given? Okay, now the debt equity ratio 0,4:1. Debt equity ratio, that is 0,4:1. Now remember that the ratio that is saying non-current liabilities is to shareholders' equity, right? So let's do this then. Let's do this. So the shareholders' equity they are given is 9,150,000, right? So we don't have non-current liabilities, but the shareholders' equity is 9,150,000. right? And then the ratio here is 0.4 is to 1. So we just have to cross multiply. Non-current liabilities times 1 is going to be non-current liabilities. So 9,150,000 multiplied by 0.4, that is going to be 3,660,000. So now we have our non-current liabilities, 3,660,000. So we said 9,150,000 multiplied by 0.4. That is how we got them. 3,660,000. Right? Now, remember, in here, there is a current portion of a loan of 228,000 that must be subtracted. So that is how we got this amount. So it means that to find out how much was the loan before we subtracted this amount, we have to take this 3,660,000 and add back that 228,000. That is going to be 3,888,000. Okay, now we are done with this part for the equity and liabilities. Now we have to find the total equity and liabilities. So we are going to say shareholders' equity, which is 9,150,000, plus the current liabilities 1,200,000. Plus 1,200,000 plus the non-current liabilities 3,660,000. That is 14,000. That is 14,110. Let's calculate again and check if we can make a mistake. 9,150,000 plus 3,660,000 plus 1,200,000. Yes, so it's correct, right? So the fixed deposit 489,000 minus 240,000, that is 249,000. Now let's go and check what did they say about the fixed asset. What did they say about the fixed asset? The fixed asset what did they say about the fixed asset? Do you have the information? Ordinary share capital, change income, fixed asset. So the fixed asset here, it is not given. It's not given, right? But we know that total equity and liabilities must be equal to total asset. So 14,110 110,000. So what this means is that the fixed asset here, they are the balancing figure. Okay, they are the balancing figure. So now to find the non-current asset, we're just going to say 14,110,000. Then we're going to subtract the non-current asset of 2,030,000. $14,110,000 minus 2,080,000. That is going to be 12,000 and 30,000. So this now means that the fixed asset it is 12,000 and 30,000 minus 249,000. So this is your fixed assets, 11,781,000. Unless if we miss something which was talking about the fixed asset, but if not, it means that the fixed asset here, they are the balancing figure. The fixed asset, it means they are the balancing figure. If they are not given, is. So they are not given, so it means they are the balancing figure.